Hello and welcome to Bforex.com Global Market Review. The dollars continue to steady gains all across the board. We saw yesterday during the Asian trading session, the dollars continued steady progress against the major pairs. Also throughout last week, we saw some major gains for the US dollar. Ladies and gentlemen, the main reason for this is because currently the market is very much risk averse. Investors and traders are scared and they're preferring the US dollar compared to the other economies. However, bear in mind that the fair value of the dollar has not been reached yet. There's no reason why the European currency and the UK currency should be stronger than the US dollar, as we see that the Eurozone economy is still in deep trouble, whereas the steps being taken in the US to make sure that the recovery will come in as soon as possible. Our opinion, it seems that the dollar should remain strong in the shorter term. It will be interesting to see how things play out though. There are some equity market news still to come out. If anything does change and stability does come into play, it could put the brakes on the dollar rally. Now let's go to Robert for a look at the commodities market.
The OPEC ministers met early last week and decided on a 1.5 million drop in production per barrels of oil per day from their region. What did oil prices promptly do? They continued to fall off a cliff. Oil is still trading between $62 and $65 a barrel. Fundamentals are clearly in play as demand is not meeting the supply. What we're seeing is oil prices continue to be weak, gold continue to be weak, and this is going to continue. Thank you very much.
Thank you, Robert. The dollar seems to be stuck in a very tight range at the moment. It is progressing, but it is making slow progress. It is rallied all across the board, but bear in mind there's not heavy volatility up and down. It's just very steady dollar progress. It has rallied a lot over the past week, but bear in mind volatility seems to be a little bit down, as now the market is scared. Scared of what, you may ask? Scared of the interest rate statement that's going to come out this week on Wednesday from the Fed. This will be important to watch out for. Market is expecting a half-point rate cut by the Fed, making the US interest rate an unbelievable 1%. We saw this interest rate in the US last time in 2004. Also on Thursday coming out, the third quarter GDP outlook for the US. Currently the market is expecting the US economy to contract for 3 straight quarters. That means we're going to see a contraction in GDP for 3 straight quarters in the US. So that looks like the tough time to come for the global economy. That's it for today. Thank you for watching. See you again tomorrow.